Hi there, Andrew Thompson here from Precision Market Trading. I thought I'd do an update on BHP. As you know, I put a video out last week liking the price when it got to 1981. Well, this week it's gone to 1973, another 8 cents down. We can live with that. About 3 or 4 days out from the previous forecast, but on Friday we went long. I did mention on my Twitter feed when it got about $20.50, I was going to buy it, which I did. So I thought I'd update you on a few of the reasons why we like it at this price again. As you can see here, we got a huge double bottom from the GFC low right the way over to last week's low. And this time period between the two lows was 2,553 days, or 2516 degrees. As you know, I've mentioned many times, over big periods of time, I always average it out. I'm priced too. And the average came out at 2,537. So from the big top up here at 45.13, which is all part of a big double top that went back over here somewhere, down to this low, the range down was 25.39.8 cents, say 25.40. So I got $25.40 down from the major top, and I have 25.37 in average time from the major low. So I'm basically 3 days out or 3 cents out, whichever you want to look at it between the two. So I'm happy to be long here. It's very dark down here. People are calling it down further. Iron ore's going down. All looks bleak, but now that's when the best buying opportunities can occur if you manage the risk. And it's all about managing risks. Just an aside, a few months ago we went long FMG when we hit a low of $1.61. It went all the way up about 40%, up to $2.40, $2.50, I think, off the top of my head. The low was at $1.61, and I mentioned at that time, I see this number come out a lot, and quite often it comes out in cycles. 161 was a big cycle, a number of time and price. And if you look at this low here, the price was $18.12, and this low here was $19.73. There's $1.61 in price difference between the two. So here the cycle's coming out. So I like the look of this. This here, it was a final low before the major top, and the final low price from there down to this week was 1975 degrees. And of course, the end price, this price here, was $19.73, so 2 cents out. Happy days for there. We'll go to the next chart. This is a bit of a longer term one. We can see we've got the big top up here. This is the double top I was talking about, the previous one. There's the one we were looking at. This is a bigger long-term one. And there's a triple top here, 1, 2, 3, but that's the actual highest price one. And from this top to the high price one was 726 bars. And as you know, that's 2 times a circle for me, 360 times 2. And from the midpoint, and you know I love midpoints between double bottoms and double tops, down to this low was 730 days. So we got that time to that time, midpoint between the tops, giving us a low down here. I like the look of that. Got the major top over here, going down into this low, and it did it in 2742 days, which is basically 19 times 144. And I won't go into that too much either. That's a very strong number. So we got the 2 tops working out at the low, the 2 tops working out at the tops, and we've got the midpoint coming down to the tops. So at the moment, I'm liking it. Basically, it's got to get above the recent little high where we went long. You can't see it here because it's a long-term chart, but that one there, remember the previous forecast, we went long, it went up $4 in next to no time, went up 25%, so we did all right out of that. Not as well as I should have, because we gave too much back, but when it gets above this top, and I expect it to, then it's truly on the way back up. So see how we go. Goodbye for now.